Welcome back, everyone. I hope you're having a great day. Thank you all so much for stopping by to join me on my daily trade review, in which we've put in a new schedule, trying to get in a little bit earlier in the day when I still have some energy to film the video. They're long days. I get up so early sometimes, and it's jam-packed from start to finish. So, it's easy to get tired and be like, well, I'm just not going to do it today. I'm going to do it tomorrow. And then tomorrow comes and we don't do it. But not anymore. So, yesterday we had a massive runner. SPRB went like 1,600%, which was crazy. Biotech company had FDA shenanigans. What was that even? SOPA, FDA breakthrough therapy designation for transladinease alpha enzyme replacement therapy. I don't know what that is, but it must, impact a lot of people if it made that kind of move, right? So at the end of the day, it is, to recap, if you missed it, we have a low float, preferably micro float, very small market cap, right? Under 50 million, smaller the better. And then we have a low daily average volume, right? A stock that's not really been moving much for a while, right? And then it gets that average low, 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 at which point we have a catalyst. An influx of volume hits, which is driven by the catalyst, the news event, at which point the stock goes absolutely parabolic because it's not used to handling that amount of volume. And that is the pattern that I have played ever since GameStop. Long time I've been playing this pattern, working on perfecting it. And, I still love GameStop, still do those daily videos for everyone. And a big percentage of my portfolio lies there as well. So if you're interested in that, don't hesitate, drop by, say hello. If you're just looking to learn how to trade technicals, entry models, today I'm going to talk a little bit about my volume scanner and the news scanner, just to understand how to do this effectively. Don't hesitate. Participate within a paper trading account. I don't want you to blow up your account by any means. I'm not giving you entries at all. Never doing that. Just talking about the entry model so you can maybe go and do this yourself, right? But practice first, right? I've been doing this a long time and it wasn't always like this. And it's not just the idea, it's the executions, the ins and outs, the bids, the ask, getting the fills, right? There's a lot to this. So with that being said, today's play is on theme, right? No news, but it is in our volume scanner. Now, my basic volume scanner settings, market cap under 50 million, relative volume above 2, and then the last price above 75 cents. I don't want to play penny stocks. It's really easy for them to be moving. It's just ignore it. And then when I see a stock, first thing I look at is where's it from? Where is it headquartered? Is it in China, Hong Kong, Singapore, wherever? Sometimes, and it's just a characteristic of those stocks, they tend to liquidate for unknown reasons, aggressively so. And for this reason, I avoid them. So always, checking the volume scanner, what's moving. In today's case, we have this, like right out of the gate, because A, it's below 50 million, and B, the current daily volume is well above its average, which is the relative volume that we're looking for, right? And then last price is above 75 cents because we don't want to play penny stocks. Easy. Now we've found what we want to play. I'm sleeping at 3 in the morning, obviously. But what an amazing entry this would have been. We have that VWAP push, break down on trend. It's holding that 21 here, reclaims VWAP. At this point, let me grab my demonstrating tool here. Is this it? No. This one? No. This one? Yes. These candles right here would have been, and even like this batch of candles too, like at this point, these are confirmation candles, but these are so groovy. And you just would have put your stop loss here, right? You enter anywhere here, preferably in the bottom leg, but you could chase it a bit with your stop loss here and run it up. Amazing. That would have been so good. But we're sleeping. You don't always get it. But what we do get is a retracement, at which point, we're waking up in the morning. It's 4 o'clock. It's typically when I'm out of bed checking charts. I see this on my volume scanner, right? First thing I check, what's trading the most? Oh, it's this one. And then we see a VWAP hold. We see a VWAP hold, and it doesn't even go to VWAP here. It catches on the 50, and now we can say, okay, maybe it's not the VWAP that's holding it. Maybe it's the 50 moving average, right? At which point, we tried to reclaim the 21, broke down, and then did that reclaim. Still a little risky biscuits, but what sold me personally, why I entered the trade, was the break of structure here, right? When the stock price blows through this recent high, that's a bullish break of structure. So we can take our entry on that. I didn't get a great fill. However, you can't always, right? And that's a big part of that is learning how to get those fills, specifically in the pre-market where you can't use market orders. It's all limits, baby. So there's no active trader there in the pre-market, which typically I like to use a lot of the time because things move quickly, right? And then our stop loss is below that recent pullback, right? Right here. This is that recent pullback. Our stop loss just goes a little bit underneath of it. We take our entry and easy peasy. We get a 1-to-1, a 2-to-1, 3-to-1. We had to wait for a little bit, but it did hold that 21 moving average again, right? So we had expansion upwards, and then that trend continues to hold. Oh my goodness. So if you didn't get nice entry on the break of structure, this I think would have been your last chance to get in, before the big move. And you say that, but you had another chance again here, right? And it's just that 21 moving average every time, right? We're just kind of touching it, expanding outwards from it. However, all things do come to an end. And when we break that 21 moving average, you see such a decisive candle downwards, and then it's, down from there. However, still kind of holding. Like, this is still way above our entry drastically, right? It's even higher than my last sell. Which that's on me, right? I'm always just focused on getting a piece of the pie. I don't need the whole pie, right? I don't have to be in the very first moment. I don't have to be out the very last moment. I just find that to be unrealistic. I just need a piece of the pie. I need to feed myself for the day. And again, I get this by using risk reward. 3% of the account is what I use. I recommend you start far lower, maybe 0.5, 1% of the account. And then I use, that risk management, which is built in to Questrade, which I love. Sorry, not Questrade, TradingView. It should be in Questrade. But so you do your settings, set your account size, set your percentage of your risk, right? And then when you set your stop loss, because I'm setting my stop loss not based on how much money I want to lose, but based on the chart's technical entry model, right? And then wherever that stop loss is tells me how many shares I can buy, right? While still respecting that 3% risk. Now that is important. Identifying what to trade, the volume scanner, the news scanner, being able to enter on a technical setup with risk management, right? So this is our technical entry model. That's where we're managing the risk. And then this is why we're doing that, because now we are staying consistent with that risk, right? So if one trade works, one trade doesn't, net even, right? Because you could have 5 winners and then one loser that you oversized in and erases your 5 winners, right? And that is heartbreaking. You don't want to be doing that. So you want to keep things consistent, and that is going to allow you to improve upon your hit rate. And this is how we do that. You can do this with just an equation in your head, your stop loss divided by your count size. I don't do it. It's math. It's hard. You've seen me play Magic, right? So I just use this little tool. It's easy. It's quick. And it's what you should be doing. So get used to it. You can do the short side as well if you go short, but I also don't recommend you do that to start when you're learning. So just get used to that. And through that, I scale out, right? So it's 75% on 1-to-1 risk reward. And then, 5%, 5%, 5%, get your last 5% out, right? Because you got another 25% after that first scale out to get rid of. I do sometimes like to, at that point, once I've scaled out the 75%, to move my stop loss up to entry. So I lock in those gains, don't give any back, or just move it up a bit, right? At which point you could trailing stop loss higher and higher. Of course, you can develop your own scale out strategy as well. This is just what I've been using and it's been working for me. Some days I think about modifying it, and then others I'm like, no, you've got it nailed, right? And it's just about being comfortable with it and, saying, okay, maybe I should do a 10-to-1 risk reward. Wouldn't that be cool? But are you going to do that consistently, right? Sometimes I barely get my 1-to-1 risk reward with my 75% scale out. So, You know, it is really just about finding the middle ground for yourself and making that work, repeating the process every single day. And that's why I'm here for not only all of you, but myself as well, to cement all of this so it is a pattern that we can repeat, right? Because it is very much a repeating pattern. Whew. With that being said, we're going to see how this unfolds after hours. My final exit was 82%, and the total run from our entry was 241%, which is really nice. Of course, it would have been far better if you entered in earlier this morning, but again, I was sleeping. You can't always be awake, and that's why I'm recording this video earlier on in the day. It's almost 12 o'clock, still 2 hours left in the market, plus the after-hours session, but we'll recap on that tomorrow if we get there. Some things were running yesterday that I forgot to recap. I try not to focus on it. It's easy with someone who has my personality type to be like, I'm trading all day from 2 a.m. until 6 p.m. But like you repeat that process for 4 years and, well, you get a little tired, you get a little sleepy, and I'm trying to step away from that. Just do the morning session, hit it and quit it, and, move on from that. So a lot of rambling today. We have CISS on the radar as well on our volume scanner. This is blacklisted for me. I don't like it. And I had that kind of, we seen this and everybody's like, oh, it's moving off the 200. We're going to do it. Rejected VWAP. Did it again, rejected VWAP. And I was like, okay, this is blacklisted. I hate this. Like, because anyone's buying here is getting roasted. Like, I don't like that. I like this, where you don't get roasted when you buy and it keeps running and everybody gets in safe. Everybody gets out safe. Well, not everybody, but who's buying at this point when something runs from freaking $3 to $40? You're buying up there? You're crazy. But there's a difference when you're buying, at $3 or $3.60 and like, this is way more dumpy. Because this is like, you would potentially buy this, but you've got your reversal, you don't have your key level breakout. So no entry model here. Reversal, no key level breakout, no entry model here. Reversal, key level breakout and hold. Here's your entry. Right here. These candles are kind of scary, but you have your reversal, and then here's your key level, right? So this candle here opens and closes above VWAP. You see this dead space underneath of it? I know I'm overdrawing, but there's this dead space right here. And that's what I mean when I say a candle opens and closes above VWAP. So you have your reversal and then your key level breakout with confirmation, and that's the candle that is above the entirety of it. And then you get another one and another one. So these would have been really nice entry candles here off that reversal signal in the morning if you wanted to play it, and it halted up. Sometimes you play a gap fill strategy. We couldn't get it, right? Because it sliced right down. You want to enter in on the gap and then play it up. However, once it breaks through the gap, you need it to, just like we needed the confirmation to open and close above, we needed that here too. And we didn't get it because each of these candles went into the gap. So no entries here, unfortunately. And again, it's a blacklisted ticker. I hate this because, and look what happened to it, I've obviously been playing this a long time ago and had not a good experience. I'm just deleting all this stuff here. Unneeded. Just reminds me of times better spent somewhere else. No, it's a dumpy stock, there's no news here, but it was moving, so I wanted to talk about that and maybe can save someone some pain in the future. They own some boats. They do some Mediterranean shipping, I guess. I don't know. It's not worth getting into. ZNB is a Chinese company, and you see what happens? And I might even continue to do so. However, it did have news. Headquartered in New York, but let's take a look at the website here. Someone told me this was an Asian stock. And then, feel free to load. Okay, we're going to come back there. Anyways, they had some crypto news, right? Which has been hot, entering with a strategic partnership to advance Bitcoin strategic finance, right? So this hit the news scanner, and then as some of that volume flowed in, hit the volume scanner afterwards, right? So we have a really nice news pop here. Holds VWAP, expands, retests. Again, another massive leg of expansion at this point, but I'm just not super into crypto personally. I don't like it a lot, and sometimes there's sketchy stuff like a website that won't even load attached to it, right? Not all companies are good companies, even though they are publicly traded, right? So a little spooky sometimes, but at least it has a catalyst, which is great to drive that initial side. Always, it's okay to play some of these stuff, even if you don't like it, as long as you're on, the left side of the apex, right? If you're on this side, sure. But you don't ever want to be trying to catch a dip here. Specifically if it breaks VWAP here. Like, you never want to be trying any of this under VWAP ever, right? It's one thing, to say, okay, I'm going to take an entry here with stop loss below VWAP, and then this is you stopping out, just to try it. That's fine, but again, I like tangible news. I like, we're advancing our treatment for Alzheimer's in a phase 3 study, something like this, cancer, Alzheimer's, autoimmune diseases. I like technological advances too. I know a crypto could technically fall into that space, but it's just so scammy. It's not like NVIDIA or AMD selling a product, right? It's, it's a lot of these treasuries are like, okay, we're doing massive dilution. We're selling 10 billion shares of our company to buy some crypto. And it's like, if you're a shareholder, you get absolutely wiped out in that dilution. And, if you're lucky, crypto rallies and, the company does well, but crypto is a very volatile market, and these companies could get margin called on their positions. And then what? Then you diluted, and then you got called, like, there's a lot of risk involved there. So be aware of all that. COCH, moving on, they have FDA approval, which is good. That's kind of what we've seen yesterday, running stuff and news pop, and then it just caught and went. We missed it. We're watching it though. Just rifles from 90 cents up to $2 there. And, it's kind of a penny stock to me. So I've kind of staying away from it. And then when the move happened, it was so aggressive that I didn't want to chase it. And then just took eyes off it. It could have trapped me here though, because there's some, like, you do have a VWAP reclaim, like specifically this candle, this green one here. And the red one before it, even this one, opening and closing above VWAP, I would take entry model there. Would we have got out here? Let's see. Just fine-tuning my own entry model. Let's say we get mid-candle on that one. There's our stop loss. Is this a one-to-one? Ooh, barely, right? So sometimes you see how I say, well, maybe we need to adjust our scale out. And then there's other times like this where, okay, that's your entry model, and you would have just barely escaped. If you had a decent entry, your entry could have been worse, and then you're not escaping, right? It could have been better, and then you're doing better for yourself. But just an average entry here, where you got to protect your neck. So I like my scale outs. Some days they make me sad, but other days, they kind of cement in that this is the right thing to be doing. Because we'll be back tomorrow. If you leave some money on the table, that's fine. It's more important to protect yourself, because if you don't protect yourself, you don't get to come back tomorrow. If you do, you do, right? So that's today. Of course, for my scanner, I sort by trades, right? So I can see what's moving the most. If you don't have a trades tab, use the volume tab. That's fine. Look at the top movers, right? They're sorted automatically for you. So go through them, hit up the stock Titan I like to use, for example. Is there a catalyst? Is there news moving it, right? Did you miss out on any other news here that's really moving, that's above your market cap? So TMQ, for example, is really crushing it on the lithium. Canadian company just flying high. But, it's a 1.6 billion company. So is a little bit bigger than I'd like. Sure, good for a swing trade, multi-day trade, great. But as far as a day trade for a parabolic move, this isn't going to really supply it for us. It's too big. It takes too many dollars to move in comparison to this, which is, infinitely smaller, 30 million versus 1 billion, right? Have a great day. Thank you for hanging out. Check out the GameStop videos, and we'll see you soon in the next. Of course, I've got Magic the Gathering videos as well under Hello Good Game if you're interested in. And yeah, we like to strategize, right? And grind ourselves into oblivion. It's the way to play Arena, and it is also the way to trade, right? So pushing your rank up in a video game requires you to repeat the process over and over and over with a consistent win rate, right? Just like taking trades over and over and over with a consistent win rate that you're trying to better. And it's okay if you lose 3 matches in a row. It's okay if you've lost 3 trades in a row, because you know you've got a 65% average and you just need to average it out further, right? More trades than not are winners, and you are managing your risk. So it's always the same, and you just need to ride that percentage. You can't force it. You got to wait for the entry models. Some days there's nothing to trade. That's fine. Wait, because, you know, it's appropriate to not only be on the right stock, but have the right entry model with the right risk management and the right scaling out, right? So it's a whole thing you got to do, and you got to do it all the time, right? But it's just like Magic, right? There's different phases, different steps, different card types that all have their own purpose and their own timing. So I don't know. Just LOL. Have a great day. I'll see you soon in the next.